Hello, my friends traders. This is Carolina Lizana, a graduate student of the Grok Trade Mentoring Program. It is Wednesday, May 4th of 2011, and we're looking at the Q's daily chart. And look at this, what a beautiful pattern we're having here on our chart. See that bounce off of the upper area of resistance right here, which we watched here for quite a while, and it was at the 59.29 mark, and we are finally pulling back down, breaking through all major areas of support on our way down, even breaking through the 58.66 mark, which we talked about yesterday, as well as our favorite moving average, which is the 8 moving average here in green. And look at this. Up here, the 8 moving average was acting as a significant area of support on the way down, and we broke it to the downside yesterday, entering into a bearish territory. And what happened here today? We got all the way up there, we hit it, and we pulled back down, which means that now it's acting as a significant area of resistance. And check this out. We are bouncing off of the 8 moving average, which is acting as an area of resistance, as well as we are breaking down through the 58.66 mark to the downside, making a lower high and a lower low, which means that we are going down. And check this out. Look at the volume picking up here. It's confirming that bearish run. So we are again down below the 8 moving average. We are in a bearish territory heading south to that next area of support down below here, which we talked about for quite a while, and I mentioned it to you again yesterday, and it was at the 57.90 mark. So pay really close attention to that 57.90 mark tomorrow. If we ever break through that one and close below it, we would be in trouble. We could head all the way down to that next area of support down below at about 57.18 mark, as well as that next moving average that we have here on our way, which is sitting at the 57.07 mark, and this is the moving average that you see here on my chart in red. And if we ever break through both of them, the 57.18 mark as well as the 57.07 mark, and we close below both of them, then we can head all the way down to that next area of support down below right here at the 56.66 mark, and then we could head all the way down to that next major area of support down below, which is here in black, and it's sitting right at the 55.85 mark. So pay really close attention to all of the areas of support that I mentioned here to you. But what else can happen here? We can get to the 57.90 mark, and then we can bounce off of it, getting all the way back up to the high of 59.29 as well as the 59.34 mark. We could try to push back up to here, and then we can pull back down, breaking through the 57.90 mark, forming an M formation, which is a bearish formation, and from then on we could crash big time. So the M formation would be confirmed only and only if we broke through the 57.90 mark and then we closed below it. So that's something to keep in mind. We do not have that formation yet here, but just keep it in mind if we ever try to push back up to that higher area of resistance on our way up here, the 59.34. So watch it really carefully. And look at the MACD. The MACD is slowing down as it was yesterday with another positive tick, but a smaller positive tick, which means that we are resting, we are slowing down, but it's still above the zero line. We are still above the zero line, which means that we're still in a bullish territory according to the MACD. So watch it carefully to see if we're going to get a crossover on the MACD confirming that down movement. And as I mentioned to you before, the volume is picking up, which is a good sign. It's confirming that bearish move. So watch that one as well to look for confirmation. All right, so hope it helps you. Have a wonderful day, and I'll talk to you again tomorrow.